I think something interesting about the dollar here lately is that I'm noticing this weird effect where earlier this month or later last month, I'm sorry, the dollar was rallying and sending long bonds up with it. Basically, dollar and bonds were rallying together. And I think what happened is the correlation flipped in the last 4 or 5 weeks, where the dollar is now, bonds are now negatively correlated to the dollar. So what's going on here is quite simple. The dollar originally was going up on the sense of a growth scare back in November. But when the dollar's falling like this and the dollar started falling, I think the correlation flipped to the point where like now the dollar's falling not because of inflation theoretically. I mean, in theory, yes, the dollar going down is inflationary, but on the idea of more rate cuts. So the dollar starts falling in the anticipation of more rate cuts, which closes interest rate differentials between nations, right? So we seem to be in this weird state that I don't know how long this persists, where the lower dollar seems to be better for bond prices at the weirdly enough. I know it doesn't really seem traditional, but that's where we are at the moment.